Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, January the 13th, the year 2020. Let's talk trading tactics. Many times people confuse tactics and strategy. They think they're synonymous. Tactics are the how, strategy is the what. Strategy is the plan. Tactics, those are the pieces. Those are the steps to get you to that plan. Now, in trading, if you really think about it, we don't have that many tactics. When it gets down to it, all we can do is buy, sell, or wait. Doesn't matter how many indicators we have on the chart or whose method we're using. When it gets down to actually the trading tactics, we buy, sell, wait. There is one other thing that's in our control, and that is our risk management. And you see, with the risk management, we can control the position size and we can control the stop loss. So I've gotten a few questions over the weekend, traders wanting to pick my brain, so I'm going to answer here in the video. But the thing about it is, when you really look at what we can do, we choose when to enter, we choose our position size, we choose where we place our stop. If the market smiles upon us, we can then start implementing our money management tactics, which would be to move our stop loss or take profit at a certain area, or we might even want to add on to the trade if it's going our way. So our tactics are really limited, but there's many indicators, hundreds if not thousands, and probably just as many different trading methods, anywhere from squiggly line crossovers to horizontal line crossovers and everything in between, right? So I want you to understand one thing though, boys and girls, fellow traders. These videos are for educational purposes only, and your results may differ from mine. And that trading is very risky. So if you are looking for financial advice, trading advice, investment advice, you need to find yourself an accredited financial professional. That way, if you lose your money, you know you got your advice from an accredited financial professional rather than from some random person on YouTube or elsewhere on the internet or at the water cooler. Okay, real quickly, let's look at the weekly chart here. We see that we've got a few that haven't filled the gap. A lot of these pound pairs haven't, and the dollar yen hasn't. And you can see here how it exited the previous week's high, and it's now 24 pips above. I think I was telling you about, looking at this. We see all these wicks, and I think I called, where to reverse and where to long. But let me go to a chart here so I can answer a couple of questions. One trader was asking about the M candles M indicator that I'd modified, and I guess I did modify it so it will show from the 0 bar all the way over to the next 0 bar. So you can see here the day's high and low. And if you're wondering about this gap, you see my broker ended at 2200 on Friday, so that's why there's no 2300 candle there. I guess they like to take that time off. So I hope that answers that question. But I think they said they were having a little trouble with H4. Maybe your broker ends on an off time like mine did. So that might be the reason why you were getting what looked like a weird candle. And so as we wait for the data, I guess, to download and recalculate, so you can see here once again, we've got the M candles indicator showing, and there's the wicks here showing on that daily. So let's hope that that question is answered. Now, another trader was asking about, is there some way that the dashboard, the TRO 2017 TRO dashboard, can show whether or not a pair has broken above the previous day's high or broken below the previous day's low? And the answer is yes. What you do is, I'll just show you here. You come here, edit the indicator, inputs, and so you use the high minus close. So you see here, the dollar yen is 22 pips above the previous high, and here it shows minus 22 because this is the previous high minus the close. So if this is a minus sign, you know price is above it, and if the low has a minus sign, so here, and so you pick the indicator period, daily, bar, 1 bar ago, that will show that the price is below the previous day's low. So anytime you see a minus sign, you know the high was broken or the low was broken. Well, actually, not, well, it was broken and price is still above the high, previous day's high, and below the previous day's low. So you see here, and plus the colors indicate purple for previous. So I hope I got that question out of the way. Now, another trader was asking me about pivots, and I'm not really sure exactly what the question was about, but I used the standard pivot calculations, nothing fancy. High plus low plus close divided by 3, and then all the normal formulas to calculate R1, S1, and the rest. So I'm not sure what you were using or looking at, but that's the formulas that I use. I think that's all the questions. So here we're up for the year, 118 pips above the yearly open. Once again, we broke above those highs, and here we're still putting in the range for the week. Here on the weekly open, you see here how it goes. Now, a trader was asking me about the how do I take statistics and then turn it into a method or a system. So, for example, what I do is, like for the weekly open, you just see what the high minus open is and open minus low, and then you run frequency distributions. How many times is it between 0 and 10? How many times between 10 and 20, and so on. So if you see that this number is really low, but a number up here is higher, then you know if you enter somewhere here, chances are price will wind up here. So, I mean, it's not difficult. It's not that hard. It's very common sense and, logical deduction. There's no fancy formulas. It's just a frequency distribution, dropping, amounts in buckets basically. Now, yesterday, which was Sunday my time, but early Monday for those of you in other parts of the world, we had called a long at the 58 for the daily inside bar 10 days ago. We called a long at 67 for the weekly inside bar 4 weeks ago. So you're either up 31 or 22 pips if you took that. And so those of you who want to say Harry hindsight, oh no, you're wrong, because you can listen to yesterday's video and I pointed out these. And once again, this is not rocket science. We're just looking at inside bar trades. And there was a trader that wanted me to look at the euro. But as you can see here, euro is sitting inside the monthly and weekly inside bar. You can see it. And it's above the inside bar 13 days ago. So you can just look here at the dashboard using the inside bar function to see where these inside bars are. And I also believe there's an outside bar function for those of you who like to trade outside bars. But once again, this isn't rocket science. This isn't difficult. It's just a simple trade. So what's the tactic? Well, we're going to go long at the line. Okay, we're going to enter at the line. We'll place our stop loss accordingly and have our, wherever we want to put the stop, we'll adjust our position size, or if we like a particular position size, then we'll put our stop so we don't risk any more on that particular trade than we're willing to lose. And then we just sit back and wait and see what happens. Trade gets triggered, our stop's in place, and the market does the rest. I mean, the only other tactic you can employ now is to exit or wait, but really exit, because once you're in the trade, now you're waiting. So you're basically waiting to exit. Okay, range, we've got 3 pairs over 100. And you can see here how we broke out of the previous day's high. We put in a yearly H1 highest open 3 hours ago. You see prices pulling back. Okay, and we took out the pivot. And the pivot was right by the open. So it was almost like I can't miss, but it has missed when it's been that close before. But one of those things, once again, when you see the frequency distribution and the missed pivots, you can tell odds, or statistically speaking, things are in your favor. So we've got enough range at 44. And you see here looking for rat reversal. So red rats are preparing to feast. Okay, weekly pivot, monthly pivot are down here at the 108, 94, 91 levels respectively. Maybe we get a retrace, maybe we don't. We hit the daily R3, moving back. You took out the pivot today, missed yesterday's. So for 2020, we've got these 2 missed pivots so far. And I think I mentioned yesterday when I made the video, price was somewhere here between 50 and 60. And I said by the time the day's over, it's not going to stay there. And that was like that's an easy call to make. I mean, you know, a daily range of 10 or less hardly ever happens, right? So once again, you could just take simple breakouts. Don't be too greedy. Be happy with 5 pips, especially if the range is low. But you see here it exited, came back in, exited, came back in, had to exit again. It just doesn't like staying between those 2 lines. And the same thing with the wick zones. It was pretty big wick zone. The previous day was a doji, which near the top usually means you look for reversals, but you trade what you see, which is something I've been telling traders for years. And we saw price breaking to the upside. There's no guessing involved. You just take the long. Once again, position size, stop loss accordingly. And then if the market smiles upon you, you make pips. Daily, weekly, why is that on M5? I'm not sure why I did that, but you can see here some horizontal line trades to be had. Einstein line, I just refreshed it a few moments ago, but once again here showing a short. Maybe you took a little heat, but then right here, now you're up about a pip. And not much motion here, even though I think that's the midline. And we hit the daily ATR range, a nice place to look for reversal, close to the weekly open plus half the min ATR, which was ATR 5. And notice we took out some of those highs that hadn't been taken out previously. So, fellow traders, that's it. Just remember, with your tactics, It's not what you trade, it's how you trade it. Drain the banks.